Non-QM mortgages or non-qualified mortgages. What is that? It's any mortgage that falls outside of the normal box of Fannie Mae, Freddie Mac, VA, FHA, generally used for investors, sometimes also for folks that are non-investors, like if you're buying a home but you can't qualify because you're self-employed and you write off too much in your taxes, a non-QM loan may be right for you. Maybe you've heard of bank statement loans. Bank statement loans are where we can look at bank statements over the past 12 months, maybe the past 24 months, and just show all of those deposits and say, hey, Mr. and Mrs. Lender, here is the proof that they've been getting all these deposits from their business. So because they've been getting all of these deposits, they made this much money. We'll say what their sector is. Let's say they're a painter. And so painters, we know, is a pretty service-heavy business. It's not like they're having to buy a ton of materials. So we'll say 70% of their deposits are true profit, 30% are not. And so that's what your income is. And now all of a sudden we can qualify you for that. So that's one type of non-qualified mortgage. Another type which is really popular is a DSCR loan, which stands for Debt Service Coverage Ratio. That's just a fancy way of saying it's a cash flow loan. We care about the cash flow of the property, not of the person that's buying the property. So if someone's buying an investment property and this property, you can rent it out for $1,500 a month, but the mortgage is only $1,000 a month, then yes, we will lend on that all day because it cash flows. Now you got to put more money down. So generally you're looking at least 20% down, sometimes 25. And then you also are going to have to buy this and show a track record of you being an investor. So these are really powerful products for investors because it takes away the red tape. It says, hey, maybe you have been operating at a loss, or maybe you just have so many properties that your whole picture gets very complicated and underwriting will be such a pain. Well, this is an opportunity to just key in on that one property, see if it cash flows. If it does, boom, there you go. We can write the loan. And the cons on this is that generally the rates are going to be a little bit higher. Especially like with those bank statement loans, you're going to see rates a little higher. If a regular mortgage is going to be 7, maybe this loan will be 8. But with the investment loans, we're actually finding that these DSCR loans, because they're getting to be so popular, there's more investor appetite for it, they're getting pretty comparable. So if a conventional loan is 7.5, the DSCR might be 7.5 or maybe 7.75, whereas before it was about a full percentage point higher. So we're seeing really a lot of interest in these DSCR loans as they're being more closely understood. And then the last thing with these non-QM loans is condos, which here in our area, non-warrantable condos are very popular, especially those condos along the beach, because there's a huge concentration of investors here. There are not a lot of owner-occupied condos, and a lot of them will have front desks and things like that. So these non-QM loans, they basically say, Fannie Mae, Freddie Mac, you have a very small box of what you're willing to fund for condos. And so with non-QM, now it opens it up so that we can fund just about anything that's a condo. But again, you got to put more money down depending on what that looks like. So non-QM loans are an awesome tool in our tool belt. As brokers, we have access to tons of different non-QM lenders. And if you want to learn more about non-QM loans, let me know. But it will definitely open up the door to be able to work with more buyers out there.